Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. All right. Hello. Welcome to yet another Value Podcast. I'm your host, Andrew Walker. If you like this podcast, it would mean a lot if you could rate, subscribe, review it wherever you're watching or listening to it. With me today, I'm happy to have on for the second time, Dave Johnson from Caligan. Dave, how's it going?
Hey, Andrew. How you doing? Thanks again for having us. We really appreciate it.
I'm really excited to have you guys on. Let me start this podcast quickly with a quick disclaimer to remind everyone on this podcast that nothing on this podcast is investing advice. Please consult your own advisor. That always applies, but probably particularly true today because we're going to talk at least one stock, maybe a couple stocks in the pharma sector. The pharma sector is famous for your drug gets approved, it goes to 100. Your drug gets rejected, it goes to 0. Hopefully none of that happens here, but obviously just extra risk. And then we're going to focus mainly on a stock that trades in the US, but it's European listed for the most part. So people should be aware, foreign stocks carry extra risk. But all out of the way, Dave, the company we're going to talk about is MorphoSys. The ticker is MOR. It trades in Germany. You guys have done a ton of work on it. You guys had a great presentation last week that I really cribbed for the majority of my background on this, but I'll just turn it over to you. What is MorphoSys and why is it so interesting?
Yeah, I mean, this is a really interesting company. And I think it really gets to the heart of you have a very different investor bases in Europe and the United States. In the United States, you've got investors in biotechnology stocks that like the risk profile, the pipeline products, they know the binary nature of a lot of these molecules, as you said. And the European kind of investor base, which is, I would say, a little bit more risk averse and would like the diversity of different shots on goal, a little bit more late stage, a little bit more fee for service. And MorphoSys started out as a German company that was focused on antibody discovery. So if you're a large pharma company and you say, I've got this target, I want to go see a library of antibodies that this company MorphoSys can develop that can maybe have a higher binding affinity than anything in my pipeline. And you'd say, MorphoSys, can you go find something that works for us for this target? And MorphoSys would go do that. And they would go, and they would usually do that for a fee of some sort of nominal amount up front and a royalty on the back end. And if you rewind to 2017, MorphoSys was 28 partnered programs with 14 different pharma companies, basically all antibodies, all biologics. And they had this really diversified way to play effectively, innovation in biopharma, where you had 28 different shots on goal. You had a royalty on each of them if they worked. And, investors loved it. European investors in particular loved it. And at the time they had one, and as part of their evolution along the way, they said, hey, we're pretty good at this antibody discovery. Maybe we should consider bringing one of our own along the way. And if it's just kind of one piece of a very much larger pie that we don't have a lot of risk on, like our investors would be okay with it. And they did. And so one of the things that was in their pipeline was an anti-CD19 antibody, which eventually becomes Monjuvi. This is the approved product that they have for diffuse large B-cell lymphoma, which is the largest case of non-Hodgkin's lymphoma cancer out there. And in 2020, they partner with Incyte, where they effectively agree to both promote the drug in the U.S. and Incyte takes the drug ex-U.S. And that for that, Incyte paid him $750 million up front, and they gave him $1 billion of milestones. So, pretty good deal. And the other thing I should say is one of those 28 programs from 2017 becomes J&J's drug for psoriasis called Tremfya. And MorphoSys owned a 6% royalty on a drug that last year did $2.6 billion. I would say analyst consensus is somewhere around $4 billion. So huge amount of money coming toward, to MorphoSys from, if you looked at January 2020, MorphoSys was flush, cash rich, huge portfolio. They just had a product approved. Things are going great. Stock's probably, if I'm looking at 140 euros a share, and things didn't go so well. So listen, Monjuvi is a great drug. The drug that they got approved, they got partnered with Incyte. It gets approved in August 2020. And listen, what happened with B-cell lymphoma is the space got a lot more competitive. So instead of, when Monjuvi was approved, it was the first second-line agent. So after kind of your standard chemotherapy, patients become refractory. If they can't take a stem cell transplant, they need something else. It was the first second-line agent to get approved, and I'm going to date myself, probably definitely at least a decade and perhaps potentially longer. And what's happened in the B-cell lymphoma space is that since Monjuvi is approved, 5 additional therapies have gotten approved, including CAR T. And so what looked like kind of open spaces where they were going to have a ton of patients coming on this drug has become a knife fight, like in the third line. And because they exhaust your CD19, they want to put CAR T before you. It has the same target. So it becomes a knife fight. So August 2020 it launches. And by that point, the market's already starting to see this is not going to be a billion-dollar drug blockbuster. It's going to be a resource intensive and much more modest launch. And so, and listen, investors started to see that and they started to rotate out of the stock. But what really probably put the European investor base over the edge is in 2021, in July 2021, MorphoSys says they took all of their royalty portfolio. So all of these 28 programs I told you about, and including J&J's like awesome blockbuster drug they've got, they sell it all to a company called Royalty Pharma, which I'm sure some of your listeners and you are familiar with. They sell it all for $1.4 billion up front. Pretty good. I mean, good package. They take all that cash and they buy a U.S. biotech called Constellation Pharma with 2 assets in development and a whole bunch of preclinical stuff. And European investors, European analysts, and everybody said, you've turned this really diversified antibody company into a U.S. style biotech where you have a commercial product and a pipeline asset. And people just hated it. And they saw massive rotation in their investor base. Like I think it was 16 of the top 20 shareholders as of the beginning of 2020, all left. All up, 100%.
It makes sense, right? You're here, as you said, you're here for royalties, and then the management says, "Hey, we were managing a stream of royalties, and now we're going out and we're huge biotech players, right?" Like it's a very big switch.
It's a very big switch, a little bit of a bait and switch, totally. And so you fast forward to the company today, and they've got Monjuvi, which is consensus is about $90 million of revenue this year. It is marginally profitable in the U.S. if you exclude kind of the research and development costs, now which Incyte picks up 55% of, where they're trying to move it into follicular lymphoma and into first-line B-cell lymphoma. And then they have this asset called Pelabresib, which is a BET inhibitor in development for myelofibrosis, which is a disease of the bone marrow where you have this overactive or malignant bone marrow that produces a bunch of bad cells that bad blood cells, bad platelets, and your body can't handle it. And eventually you're not producing enough of good red blood cells, good platelets, and you become highly anemic, and it causes a whole lot of comorbidities, and you eventually expire. So that's kind of what Incyte, what MorphoSys is today, is one approved product that's sort of, it's a good product, and it definitely fills an unmet need, really safe, really great for kind of older and frail patients that can't take a stem cell transplant. And then they have this, what we think is an incredibly exciting shot on goal, a phase 3 in Pelabresib you're going to turn over the data card in December this year, December 2023.
And now a quick word from our sponsor. Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are, and you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. I want to talk about how you guys kind of got involved and got Constructivist, because I was flipping through their deck, their annual meeting deck, which happened maybe 2 weeks ago, I think. And one of the calls is Caligan, 3% plus shareholder, and they talk a little bit about engagement. I want to get there, but before, I think it might just help to frame this by talking. You've already mentioned their parts, right? Their parts these days are they have net cash, Minjuvi, Monjuvi, the milestones, and then the drug. But the stock, as you and I are talking, and again, not investing advice, but as we're talking, trades for about 27 euros over in Germany. And I think it might help people to kind of frame why you got involved, how you got involved as we start thinking about that. If we just quickly did where you see value, right? Like the classic sum of the parts here.
That's super helpful. MorphoSys, when you, I think everybody kind of talks about there's a lot of negative enterprise value companies, and there has been in the biotech space over the last 2 years. And starting in December last year, MorphoSys was one of those companies. So it had about €1 billion of cash. They had about 600-ish of kind of net debt. And it was a very, very tiny market cap, effectively trading for nothing. Despite the fact that they had this approved asset in the US, approved asset in Europe, and a late stage phase 3 asset in development with Pelabresib. And so we kind of looked at it and said, okay, you got the net cash, and it's going to cost you, you're going to burn some of that cash to get to this data card for Pelabresib at the end of 2023. But if you account for that, you still have a net cash position at the end of this year. So this company still has positive cash flow per share at the end of this year. And what we said with Monjuvi was, okay, this asset's doing $90 million of revenue today. It's going to grow. You can always take a little bit of price, and its penetration in the community setting is a little bit, it's still underpenetrated to where it probably is going to get to. And one thing that was really important to us is that if you looked at, they have to report the separate P&L for Monjuvi in the US because they share it with Insight.
Yep.
And so they both put the cost in, and then at the end of the day, they split whatever the profit is. If you looked at 4Q 2022, they had taken an asset that was losing $20 million a quarter when it started to launch, and they'd massively reset the expense structure such that it was profitable. So when we said, hey, if you run out the cash flows for this without assuming massive growth, you can have a positive NPV per share for MorphoSys shareholders on this asset. And then in Minjuvi, which is the name of the drug in Europe that Insight markets, they owe a royalty back to MorphoSys. And so that's the cash flow stream. There are 16 analysts that cover Insight. They all provide projections on Minjuvi. And so you have a reasonable degree of confidence about what that drug's going to do. And importantly, in Europe, CAR T is not as widely available. And so you have, it's less competitive. Minjuvi actually sits earlier in the treatment paradigm where you're getting a healthier patient population. And so I bet you, if I was a betting man, I am, I guess, Minjuvi is probably likely to be a higher peak sales than Monjuvi in the US, excluding kind of the first line and follicular dynamic, which we can talk about later. And then the third piece that we said, so we decided the fourth piece, I guess, because we have cash, Monjuvi, Minjuvi, royalties, and then these milestones. One of the things we mentioned when Insight did the deal with them in January 2020, you had this package of milestones that is not sales based. It's all regulatory based. So if the drug can get approved in these two indications that they're leading it in, which are follicular lymphoma and first line B-cell lymphoma, Insight owes them up to $535 million.
Yep.
It's great. Doesn't matter if the drug sells zero or the drug sells $1 billion. It is what it is. It's just regulatory driven milestones. And Insight's paying 55% of the cost. So we ascribed some probability of success to that to get to where we thought, a base case value. If we put zero value to Pelabresib, which I think is completely unfair, if we put zero value to Pelabresib, what's our floor value for MorphoSys? And that's really where the building blocks is. When we started getting involved, we said, hey, you own this option on a phase 3, irrespective of what you think about it. You own this option for nothing. And then as we started digging in, we got very excited that we think that they have a potential first line drug in myelofibrosis with blockbuster potential that in January, you were getting for free. You're paying a little bit for it now, but I would still argue that you're still getting it for you don't have to ascribe a high probability of success that I think is going to be a high probability shot on goal for this thing.
And if I just skipped ahead, so obviously you think Pelabresib, and I'm cheating because I'm looking at some of the stuff you guys have put out on this, but the stock today is 27. And I think the way you guys kind of think about that is at the current price, more than half of that value would be covered by the net cash at the end of this year. So after 200 million plus of cash burn for the remainder of this year. So more than half the share price is covered by that, plus Monjuvi, Minjuvi, and the milestones. So, you're paying for less than $13 per share net. You're getting Pelabresib, which I think you guys think risk adjusted could be worth as much as $45 per share. Is that kind of how you guys
it's kind of up down? Exactly. So we kind of always look for things that have kind of 3-to-1 up down. And right. So you're paying 13 for something that we think is worth 45, right? So that's
risk adjusted, obviously. Like
risk adjusted.
If it hits, it's worth
even more.
I want to talk about Pelabresib and dive that, because as people just started, that's where the majority of the value comes. But I do want to talk about, because again, the company has acknowledged it. You guys have talked about how you came to get involved in this, kind of how you guys engage with the company, because A, it's interesting, and B, I think how the company responds. You mentioned it was like the best interaction you guys have had with the company who you've engaged with. So I think it's worth talking about that before we dive into Pelabresib.
Yeah, I mean, that's, of course. I mean, we're always happy to talk about it. I mean, that's one of the things that we kind of pitch about ourselves. We are active engagement in life sciences. That's the exposure we give to our investors. And what does that mean a lot of times? And obviously people have seen that we've had some, more hostile engagements, and sometimes we've had some really friendly engagements where we put pipes into companies. But we have a very formulaic way we sit down with companies. We have the presentation has 3 sections. Have you underperformed? Here's our reasons why Caligan thinks you've underperformed. Here's what you can do. And when we sat down with Jean-Paul, who's the CEO here, we went through section A, section B, and we came to section C, and we said, hey, the things that we think are, the underperformance was clear. The reason why we thought they'd underperform was obviously we thought the Monjuvi was potentially negative NPV and that they should try to get out of it. We were wrong, but that was one of our theses. We thought that they had a convertible note that was creating an overhang on them, that they was trading at a big discount that could be attractive. We thought that the market was giving them credit for their early stage R&D. And, fourth, we said, hey, you're a US biotech in a German shell, right? You're kind of in no man's land between an investor base that's going to appreciate what you are and an investor base that has no idea how to value you. And when we got to section 4 about how to do things, Jean-Paul was like, agree, disagree, agree, agree. And it was so, and then he went through with an incredibly detailed rationale, all based on public information about, here's what he said, on Monjuvi, you're missing the milestones. These 535 million, we have a high chance of getting these. We believe in these programs. Insight's bearing 55% of the cost of those. All the money's in the ground. It's kind of sunk. You're going to turn over those data cards pretty soon. That's worth a lot of money to us. It's worth more than our market cap. And he's right. And on the convert, we sat down and we said, hey, you're trading a big discount. You get a big cash balance. You can capture some of that discount. It's a low risk way for you to get value to your shareholders. 6 weeks later, they announced that they're tendering for their convert. They bought back 25% of it at a better price than we thought they could have gotten. So it was super great. A couple of days later, after we met them, they cut all the early stage R&D. They basically said, we are going to focus all of our resources on our mid to late stage pipeline. And on the US thing, they said, listen, there's some things that you can't appreciate about, tax consequences for moving from one jurisdiction to another. We've got a really great German heritage, but we hear you on, that we are a little bit different than what a normal German listed company is. And it's been a fantastic dialogue with us. I mean, one of the things that we will always appreciate, our operating partner with us in this investment is Paul Fontaine, a Belgian national. He's had a lot of experience brokering between Germans and French. He's been there with us the whole time. And I think we've had a great engagement with Jean-Paul, and we think he's doing all the right things. And that's one of the things he might have been doing all these things without us ever showing up and doing the presentation ABC. But that's great. When that happens, that's fantastic. That's like perfect alignment. We got value in the investment, and we've got a management team that's doing the right things. That's great. We're excited about that. It's a lot less work than the other stuff.
It's a lot less work than running a proxy fight and having to yell at them and worried getting the lawyers involved. I absolutely hear that. So let's turn to where you guys think as people heard from the sum of the parts, the majority of the value here is, right? Like the potential to be worth more than the entire market cap, and that's Pelabresib. I guess, do you just want to talk, what is Pelabresib? I have some questions here, but why don't you just walk us through what Pelabresib is and why you guys are so excited about it?
Right. So let's take a big step back and talk about the disease a little bit first. So myelofibrosis, we'll try to just do it really basic. Your bone marrow becomes malignant. You produce a lot of cells, and you produce a lot of cells that are not helpful to the body, a lot of deformed malignant cells in your body. And your body compensates. And one of the ways it compensates is your spleen, which is another place in your body where cells are made. It begins to overcompensate. It effectively tries to make more platelets. It tries to make healthy red blood cells, and it tries to process all the bad blood cells your bone marrow is making. It tries to, this is kind of where the cytosis comes in. They're trying to kill them all, and they try to get them out of your body. And the spleen basically starts to work overtime. And the spleen is kind of right here. And so you see these patients, the biggest thing that they present with is splenomegaly, where their spleen is enlarged massively. So you'll see a person, they've got, huge perfusion of like what looks like their stomach, or on their side of their spleen, it's just enlarged to massive volume.
If people are watching the YouTube, they can see me. I keep looking right because you've got the photo in your deck, and it's not you can tell there's something going on there. It looks like it's a man, and it looks like he's almost pregnant. His stomach is it's not
terrible. Terrible. And right, and the thing that you see, so these patients, they don't have enough red blood cells. They become anemic. They become fatigued very quickly. They've got fibrotic activity in their bone marrow, which is kind of permanent scarring. Eventually, they're not going to produce enough healthy cells to sustain their life. And the other thing that happens is because the spleen enlarges, it starts pushing against the stomach. And so your stomach starts to shrink, or you feel like you're full more quickly. So these patients lose, despite the fact their spleen, at your point, like it looks like they're completely enlarged, or you could look like you're pregnant, is that you start to lose a lot of weight.
The person in it looks quite emaciated. Yeah.
It's a terrible disease. And right, like a high risk.
This is 18,000 patients in the US. You have like most of these rare diseases, unfortunately, like it's awful. Every time I look at one of these, I'm always just like, oh my God, I'm so glad I don't have it. It's terrible. You feel awful for that. This happens.
That happens. And so they have this, a high risk patient, generally kind of presents in the early 60s. If it presents, a high risk patient, somebody who's got other comorbidities, you're probably looking at a year and a half of life expectancy. For some of the younger patients that have it, because it's always a spectrum, if you can manage it, you can tolerate some of the treatment, you can get out to five-ish years. But it's a terminal disease. It's not curative. You're not able to stop. No, nothing's been able to show to date that you can stop or have antifibrotic activity in the bone marrow that can reverse what's happening, which is you've got bone marrow producing bad cells. And so the way that this disease is treated today is with a JAK inhibitor called Jakafi from Incyte. And what Jakafi does as a monotherapy, so you or I come in as a newly diagnosed patient. We've got a big spleen volume. We've got all these symptoms of fatigue. We're tired. We're anemic. We've got really screwed up blood. Sometimes we have thrombosis because we don't have enough platelets that have knocked down. So you come in, or thrombocytopenia, sorry, and you come in, and what do? They give you this Jakafi, and they say, what's it going to do? Well, in 40% of patients, it's going to shrink your spleen volume by about 35% in about 24 weeks. 45, 40, it's somewhere in that range. And if you have a baseline symptom score of this fatigue, anemia, headaches, all that stuff, it's going to try, in about 40% of those patients, it's going to take it down by about half in the 24-week period. So it helps. It's a good drug. It helps. Most of the patients stay anemic. Some of the patients have thrombocytopenia, so it does knock down your platelet count a little bit more. It does require a lot of dose reductions because people can't tolerate the higher dose, which is obviously you're going to get a better therapeutic window at that higher dose, and they got to go down to a more suboptimal dose. But it's a good treatment. It's a good drug. It's frontline. It does this year across a different number of myeloproliferative neoplasms, majority of which is myelofibrosis. It does about $2 billion, $2.4 in that range. U.S. and Europe, or U.S. and then there's European partners. So sorry, just to go back on the disease. That's the treatment. So all the drugs that are being tested in myelofibrosis are all add-ons to this drug Jakafi.
Yep.
And what they're all trying to do is to try to do what Jakafi does better. Help Jakafi, and you want synergistic activity between the two molecules, because It's important. No matter what, just because it's an approved standard of care, patients are going to get put on Jakafi immediately when they get diagnosed. So all you can do is try to do better than what Jakafi does alone. So what did Pelabresib do? So Pelabresib is a BET inhibitor, and the BET proteins are implicated in a lot of the fibrotic activity associated with myelofibrosis. And so it blocks that BET pathway and hopefully it allows the body to better control this abnormal cell production and to basically relieve these symptoms of anemia and thrombocytopenia. So in a large phase 2, about 84 patients, they gave Pelabresib plus Jakafi for newly diagnosed patients. And what it showed was about 68, instead of that 40% that Jakafi does alone, 68% of them got their spleen volume shrunk by 35% in 24 weeks. So, almost almost a third more patients got a better response on spleen volume than just with Jakafi alone. And on the symptom score, instead of that 40% of patients getting that symptom score down in half, it had about 56%. So meaningful improvement on the efficacy side. But then you always add, when you do these combination trials, how much toxicity you're adding by giving them another drug. And the answer was basically not any. So when you looked at the anemia, it was actually better. The patients became less anemic than they are on Jakafi alone. And from a thrombocytopenia, which is your platelet levels, didn't have any effect. And that's one of the things that's kind of limited that inhibition development for big pharma previously. So,
if I could just add there, so look, improved efficacy and no increased toxicity. I mean, that's great, right? But the two things I wanted to add there, and I'm stealing this from you, I'm looking at your slides, but number one, yes, improved efficacy is great, but the most important thing is that the lower bound of the confidence interval on it is actually higher. If the other drug did 40%, the lower bound of this confidence interval, I think it was 57%, is higher than that. So, it's not just that it was a little higher. It's not that, hey, this was a little bit of luck, one or two patients. Like, there's a confidence interval here, and statistically, you're well over the improving efficacy, even at the lower bound of that confidence interval. I don't know if you want to add anything there.
You said it better than I did.
I don't know about that. But the other thing, and this might be jumping a little bit ahead, but the stock has gone up a good bit over the past couple of weeks. And I was talking to someone on your team. I was like, oh man, wish we had talked about this, 2 weeks ago when it was a little lower or something. It was like, yeah, obviously you'd love to get in as low as humanly possible, and that's nice, but we're actually more positive. And again, you can tell me if I'm putting words in you or your team's mouth. We're more positive, and we think the market is actually underappreciating that they've really enrolled the next trial for Pelabresib really quickly. And we think, I'm a generalist, right? We think generalists don't understand when you enroll a trial this quickly, it's because doctors, the company, everyone is seeing really great results and they really want to get their patients in there. So again, I don't want to put any words into your mouth, but if you just want to talk about the dynamics of the trial.
Yeah. I mean, so when MorphoSys acquired Constellation, where Pelabresib came from in July 2021, Constellation was originally going to try to enroll 300 patients, and they launched that. In, I want to say, the end of 2020, like November-ish. And at the same time, you had AbbVie, who's running another compound called navitoclax in combination with Jakafi. And they said they started their trial in September 2020, and they said, we're going to enroll 250 patients. And what MorphoSys did when they acquired Constellation, it's going back to your point about confidence intervals. They said, we don't want to take any risk. So we're going to increase our enrollment from 300 to 400 patients to make sure that we have the highest degree of success in that symptom score reduction. So we make sure that we really make sure we overpower this study to make sure we kind of eliminate that left part of the tail in the confidence interval if we can, or reduce the amount of times that you might actually end up in there. So we're going to increase the patients to make sure we see that. So we're going to go for 400 patients. I mean, up a third in terms. And so you have these two drugs out there competing for patients, right? Everybody's trying to get a clinical trial enrolled. There's COVID going on, and they complete enrollment 6 months early. MorphoSys does. AbbVie completes enrollment on time. So AbbVie recruited 250 patients in more time than it took Pelabresib to recruit 430 patients. They ended up actually getting more demand than the 400, and they didn't want to take. Docs were still trying to put patients in the trial, and they said we only did for 400, but like they didn't want to tell a doc you couldn't put your patient on this drug because obviously it's got a great profile from the phase 2 in terms of that risk benefit, how much efficacy adding versus how much toxicity adding. So that was an incredibly positive sign in the community, in the KOL community, and especially. There's a lot of excitement for this drug. And one of the docs, when we were doing our KOL calls, one of the docs told us is, like, I know what a ruxolitinib patient looks like. Ruxolitinib or a Jakafi patient looks like. I know they come in, they're fatigued, they're anemic. And I can't tell you that I know exactly who's getting placebo in this trial and who's getting Pelabresib, but I can tell you that I know there's a certain degree of patients that look different. Can't tell you if they're the placebo arm or they're the ones, but I've seen what Jakafi patients look like. So, we've been, incredibly enthused when we've talked to KOLs about this mechanism. And the other thing that was really interesting is that, when the phase 2 ended, it was a 24-week study. So as soon as you got to 24 weeks, they're like, here's the top line data, here's it's going to go. But they let patients continue. And you've got patients on this drug now for 3-4 years that are having symptoms controlled and their spleen volume is reduced and they're living not normal life, but much better life. And that's that durability. It tells you how active the drug is. And that was really impressive to us because there's these two big hematology conferences, EHA this summer and then ASH in December. And every time they update it, every time they update their data, they say, hey, here's our phase 2, here's how our patients are doing. And patients are staying in the trial and staying on drug, and they're having great control of those two kind of efficacy endpoints we mentioned. And that to us gives us, it's another layer of confidence into, we think this has got a really high probability of success.
I remember in a prior life, I did some healthcare stuff. And one time I was looking at a drug and I was like, hey, like all the patients are dying after 5 years. Like, is there something wrong with this? Is there something wrong with this drug? Like, what the heck's going on? And they're like, dude, the average, life expectancy of somebody with this disease is 9 months. Like if all the patients are dying after 5 years, you're looking at like the greatest invention in the history. And like just listening to the numbers, you said, hey, some people have been on this drug for 3 or 4 years after the trial. It's like, it's not just that they've been on for 3 or 4 years and the drug isn't like really harming them. It's that they're alive after 3 or 4 years seems to be the big thing. Because as we said, a lot of the people, the life expectancy here is a year. If you get it when you're younger, maybe 4 or 5 years, but these guys have been on it 3 or 4 years. Like that's pretty incredible.
Yeah, and they purposely went after that high risk patient group. So I think in the phase 2, I'm gonna have to go back and look at the exact notes, but I thought it was about almost. Here we go. Let me pull it right up. The phase 2, half their patients with a high risk. Half those patients that they took in their phase 2 were patients that would otherwise have basically been dead in about a year and a third.
All right. So I mean, obviously that's all awesome, but so I might have been misremembering the acceleration of the patient count. I guess let's talk next steps for Pelabresib, right? So here we are. I think they complete the enrollment of the phase 3, top line of results expected end of 23, if I'm remembering correctly. So like, how do you see this playing out going forward?
Yeah. So the one thing you always got to think about is in our reviews in biopharma is you're taking two kinds of risks. Taking a risk that your drug, works and it's going to continue to work, and you're taking a risk that competitors' drugs maybe work better than yours. So between now and November, December, when their trial is going to read out, you're going to have one data point from a competitor, AbbVie, that we mentioned, this drug navitoclax, and that should come out. I mean, any day now. Their trial stopped in April. AbbVie's a big organization. You got to clean the data. You got to make sure you're doing the right things, but it should be any day now. And it's really interesting. When we dug into navitoclax was a drug that was on the shelf at AbbVie for 20 plus years. And the reason was it's a dual targeting mechanism. And one of the on target effects of the mechanism is that it knocks down your platelets. So I think we talked about before, patients already have low red blood cells in the myelofibrosis. They also, a lot of them have low platelet counts because they've got a lot of, again, the bone marrow, they produce cells, they produce them all badly. It's not just like they produce bad red blood cells. And so AbbVie was running a phase 3 in combination with Jakafi on top of basically a 32 patient phase 2 study. And what that 32 patient phase 2 study showed was they were able to get a better spleen volume reduction, or 35% reduction in more patients than in Jakafi alone, but they didn't really have any improvement on the symptom score. And if you looked at the combination of the low platelet counts between both studies, almost a third of the patients had grade 3-4 thrombocytopenia in the navitoclax study, which, I mean, docs are going to say these patients have enough problems as it is. Do I really want to add that toxicity? So what we expect for that is it probably is going to show some benefit on spleen volume reduction. The the 50% symptom reduction, I mean, that's no better than a coin flip if they're going to show any benefit on that. And the toxicity is an on-target effect. So we think from a product profile perspective, AbbVie's drug is not going to be as clean a benefit to risk profile as Pelabresib. And that's what we expect. So even though they might be able to announce this phase 3 results, they might be able to apply for kind of an early 2024 launch. We think that from a product profile perspective, Pelabresib is going to be better.
So that is Pelabresib being better than their competitor, but what about Pelabresib getting approved and launching? What do you think the timing on that is?
Yeah, so we're very positive into some really great top line results, benefit on spleen volume, benefit on symptom score, low toxicity addition to Jakafi alone. And so if they show good top line results in December, then you're talking about from then end of year 24 when they're getting approved. Now, what I would tell you is one of the things we've talked about a lot with all of our LPs, and one of the reasons we love the sector is the evolutionary food chain in the sector. And right now, one of the things we would tell you is if you looked at big pharma today, $140 billion of revenue is going to come off patent in the back half of the decade. And big pharma is desperate to replace it. And their internal pipelines aren't going to do it all. And so when you've got assets that have $2 billion plus potential, and they're de-risked scientifically, that's an attractive asset. So we think that, listen, I think if MorphoSys has great data like we think, they've got a viable standalone strategy and they're going to be able to do great things as MorphoSys. But we also think that there's a lot of strategic optionality once you've got a de-risked asset that everybody says it's synergistic with the standard of care and it leads to a lot better patient outcomes. That's going to be very valuable to us.
I think so. What you're saying there is, hey, look, the phase 3 data, and I don't think we've explicitly said it. I think they'll announce the phase 3 data early 2024 is when they'll announce this.
No, it's before. Based on where we think it's late November, early December.
Late November, the end. And then what you're saying is they could and are prepared to launch standalone towards the end of 2024 if they have to. But as you said, the most likely is you do this, and then if you've got a de-risk, hey, the phase 3 data was great, it makes sense for all parties, right? Hey, MorphoSys, you can either go build out an entirely new sales force, get on these insurance pricing, start grabbing up, burn a lot of cash along the way doing that, or you can sell to Pfizer over there who's already got that. All they need to do is write a check and then they can plug it in and they can scale this up in a second. It actually does make sense for everyone. I just wanted, on the call that you did, you were mentioning you were talking to a banker and they were talking about how the evolution of discussing deals and failed deals with boards have gone for big pharma. Do you want to give that story, or I can jog your memory a little bit more if you don't remember?
Oh, no. Yeah. I mean, it was interesting, right? Before the patent cliff has become much more acute in the last couple of years. And, everybody knows Humira from AbbVie's coming off. That's like the biggest blockbuster drug ever. You've got Keytruda at the end of the decade, all this stuff. And there is such pressure on these companies and management teams that, whereas before, management teams didn't have to go, they went to boards to say, can we get this deal approved? Can we do this? Now they're having to go to their boards and say, this is the reason why we lost this deal. This is the reason why we didn't bid on this deal. This is why we don't think the science is that great, or we think our competitor made a mistake. And they're having to justify not doing deals instead of doing deals. And that's a big change. It's a big change in the mindset. And the one thing I think we should mention is, so when you're saying that MorphoSys would have to go it alone, well, they do already have infrastructure in hematology oncology with Monjuvi, right? They got that in the US. They don't have it in Europe, and I think they admit that. And they may not be, having it in Europe may not be the best decision in the world, but the one thing we talked about at the beginning is that they've got this partnership with Incyte. And Incyte owns half of Monjuvi in the US. They own all of Monjuvi in Europe. And Incyte markets Jakafi, the drug that it's being used in combination, that Pelabresib is being used in combination with, that, oh, by the way, goes off patent in 2028. So the major blockbuster for Jakafi, right, the center of Incyte's valuation goes off patent in 2028. They don't have anything in their armamentarium to replace it yet. Yep. And you've got this de-risked asset over here with a company you're already partnered with that is an additive onto your current drug. So, and you owe them $535 million of milestones if they're successful with Monjuvi that you paid 55% for. So there's a lot of reasons why, if this is successful, Incyte should, I would say strategically, people would look at this and say, from Incyte shareholders would say, that's a good deal. That's a good idea.
It's a deal that just makes sense for everyone, as you're saying. Let's talk real quickly. So I think we've talked a little bit of the science, we've talked the pipeline and everything. I want to quickly ask how, we threw out, hey, we think the risk-adjusted value of this is about, Pelabresib is about $45 per share. How do you come up with that number?
So the way that we kind of got there was, if you, and pricing is kind of, for these drugs, is kind of all in the multiple teens of thousands of dollars per month. But if you attach, we think this is conservative, but if you said, because we talked about at the beginning, you can add this drug to a patient that's going to get Jakafi and improve their efficacy without any, increased toxicity. Why wouldn't a doc do it? But we said, hey, what if they only get half the patients that they're newly diagnosed in? And what if we only get the same duration of response that they get with ruxolitinib? So usually your discontinuation rate with Jakafi is about 30% in the first year, and then it kind of falls off 20% in the second year, and then it kind of falls off a cliff after that, or 50% about the second year, and so it kind of falls off a cliff. And so if we only get the same duration of response, we're not able to improve how long these patients stay on drug, which our phase 2 data would say, oh yeah, you can, that you get to about $1.1 billion of peak sales in both the US and Europe. And when you look at the precedent transactions, and we've got 4 of them in myelofibrosis in the last 3-4 years, where we can look at that the average peak to sales multiple that companies paid was about 2 times. And then we put that on a probability of success and divide that by the shares outstanding. So we put about a 78% chance of success, which, as you said, you went back to, hey, 95% of the time, if you replicate your phase 2, you're going to do better. Or actually 97.5, right? Because there's the 2.5 on either side. So 97.5% of the time, you're going to do, if you replicate your phase 2, you're going to be better than ruxolitinib. But we're saying, hey, let's do 78%. Then that times the peak sales times 2 over shares outstanding times probability of success equals 45. So
on that probability of success, so you guys, again, y'all have a slide up here with 1, 2, 3, 4, 5, about 8 different banks who cover and estimate odds of Pelabresib, and none of them are below 50% odds that this gets approved, but only one of them is above 70%. Most of them are at 50 or 60%. So just want to ask, you said, hey, we're doing 77, 78%, and we actually think the odds are higher based on the base rate and the data and everything. What are you seeing? I guess more, what are they missing when they throw 50 to 60% out there versus what you guys are seeing or what the base rate says?
Listen, that's a good question. And, we tried to talk to some of these analysts, and I think I think the analysts, generally sell-side analysts do a great job, and I don't want to pick on anybody in particular, but I think in general, the coverage of MorphoSys from that diversified antibody is pretty much the same. So if you were the analyst to cover the diversified antibody and you cover other kind of European pharma services companies, and now you're looking at this US biotech, it's a very different, risk structure and profile than what you're typically used to evaluating. And what I would tell you is, if you just think like logically, right, they all put 50% probability of success on there. They all have a peak sales that's not like crazily off ours, right? I mean, somewhere around $1 billion.
yours is right in line with the average. There are one or two who I think we mentioned about $1 billion to 1.1 billion. That's about where a lot of them are. There are some people who go up close to 2 billion, but yeah, they are all pretty.
But if you just took the same math that we did about how we got to our value per share, the value per share of Pelabresib is higher than their price target.
That's exactly what I was going to. I had a big position in Twitter when Elon Musk was trying to buy it and backed out. And, you could talk to some analysts and they would say, you'd say, hey, you've got a 60% chance of Twitter winning. How do you come up with that? And they talk a lot. But if you really put truth serum in, they'd be like, hey, we think Twitter's probably like 90% to win. But if we put 90%, like the price target looks ridiculous versus the current share price, right? And I think you have the same thing because I'm just looking, to grab one who's right in the middle. Commerce Bank has 50% chance of success, $1 billion in peak sales. So they come out with about 18 or 20 euros per share for Pelabresib. That's about the share price. So you get everything else for free. And if they put anything else, then they've got to start saying like, hey, here's why we're going out on a limb. And it looks crazy. And guess what? If you're at 50 or 60% and the drug's approved, you can probably take a victory lap anyway. So it's just kind of like, there's no incentive to go any higher is kind of how I would think about it.
Yeah. And I think, UBS just initiated coverage end of May. And they put a 47, they were a little bit more intellectually honest. So they came out and said, hey, we think you're getting Pelabresib for free. They put a 47 euro price target on it. So we think, listen, I think people are starting to wake up because it's, the one thing people always talk about, what do you not like about the sector is you have companies that kind of go into this catalyst desert, right? You report something great. And listen, everybody was like, you report something great and all they want is like instantaneous, like it's going to translate to revenue. And that's just not how drug development works, right? You report something great, and then you're going to go test it in a larger sample size. And then you're going to go out, and then you got to go talk to the FDA and the EMA. And so MorphoSys, they had this horrible transition in the shareholder base post-Constellation. And then they kind of went into this, not a quiet period, but it sort of was, there wasn't a lot of catalysts. They're just focused on enrolling the study, getting the right patients in, getting them on drug, recording the results. And that's where we are. But now you're starting to wake up. Hey, we're 6 months from data. Like, okay, people start to wake up, right? I mean, that's
you definitely see it in the US, right? Especially when you're a month from data, all of a sudden the stock starts, the volume picks up and, the 0-day options traders start buying it. I want to ask one more quick question because obviously they got this drug from buying Constellation. And there's just one thing I think is worth noting. The Constellation sales process, obviously Constellation had to file obviously there was a proxy involved in everything. And I just wanted you to speak to the Constellation sales process. Look, it was back in April 2021. So obviously there's a lot has happened since then, but I do think you can learn something from the Constellation process if you want to talk at all about that.
Yeah, I mean, we went back through and looked. It was competitive. I mean, there were 4 bidders, and the process was accelerated, and MorphoSys was helped that along. And they'd had a lot of partnering discussions their Constellation had, that turned into offers. And so I think, when we combine that with, you look at all the other transactions in the space, whether it be Sobi buying CTIC, GSK buying Sierra Oncology, Merck buying Imago, there's a lot of interest in this space from larger pharmaceutical companies because there's unmet need. I mean, people really recognize that Jakafi is great, but if it only works for 40% of patients to help their symptom score and help their spleen volume, there's 60% of patients out there that aren't having disease control. That's a lot.
I have not done a lot on Jakafi, but it is kind of crazy. Like you've got an approved drug first line that is, hey, it only works for 40% of patients, right? Because 40%, that's great. It works, but it's kind of like when I think of a drug, I'm like, oh yeah, it works for 85% of patients. Like it's crazy that there's a first line that's only 40% of patients.
Well, I mean, but to be fair, right? Keytruda is probably, which is one of the, that's going to be on pace to be the best drug ever. Probably only works about a third.
Yeah.
32, 34, right? So, then again, when we're all trying to discover more, right? And that's a great part about the industry. It's trying to elevate standard of care for these patients, and they keep iterating on it. And I think the next immunotherapy will be better. And I think Pelabresib will be great in terms of, an add-on. That's great. You can improve. We got a lot of room for improvement, right? And people will pay for that, right? It's good for payers, good for patients, it's good for shareholders. That's the triumvirate all wins.
And now a quick word from our sponsor. Are traditional expert calls in the investment world becoming obsolete? According to Stream, they are. And you can access primary research easily and efficiently through their platform. With Stream, you'll have the right insights at your fingertips to make the best investment decisions. They offer a vast library of over 26,000 expert transcripts powered by AI search technology. Plus, they provide competitive rates on expert call services, and you can even have an experienced buy-side analyst conduct the calls for you. But that's not all. Stream also provides the ability to engage with experts one-on-one and get your calls transcribed free of charge, all for 40% less than you would pay for 20 calls in a traditional expert network model. So if you're looking to optimize your research process and increase ROI on investment research spend, Stream has the solution for you. Head over to their website at streamrg.com to learn more. Thanks for listening, and we'll catch you next time. I want to just, before we wrap up, we'll talk real quickly. You mentioned one of the first things you told them to do when you kind of started engaged, you said, hey, we should tender for the convert bonds outstanding. And they went and did that pretty quickly. I think you said at a price better than what you said. Just want to talk about the convert bonds that they took out, why this was such an accretive transaction. And there's a story about some of the holdouts that I think might be interesting to people as well.
Yeah, so they had basically a zero coupon bond outstanding that they had issued when capital markets were frothy. It was great. Good transaction, good for them.
Look, I might still, my Peloton, I hurt my back, so I've only been able to bike a little bit recently, and I might only be riding my Peloton right now because they issued some zero coupon bonds in like February 2021. They might be gone without that.
That's awesome. Yeah, so MorphoSys they had issued a convertible note, kind of a zero coupon, and it traded down. It was probably about 120 euro conversion price, and so as the stock had tanked, it had all kind of gone down. So it was trading at about in the low 60s. And so what we said is like, hey, if you buy it back at, I think we said if you bought it back at 72, you'd realize a 22% IRR by relative to just letting the bond outstanding, right? Because you bought it back that discount, you amortize it over that discount over the maturity of the bond, the time to maturity of the bond, and we're like that's a good use of capital, right? Like 22% IRRs are good IRRs, right? Like that's great. And they ended up buying about a quarter of their bonds back for 64 euros. And when they went out to try to get more, they had some convert holders who told them, no, we actually think you might get back to 120. So, the one thing we didn't talk about is like some of those 28 programs, they still have partnered those out. There's value that we're not ascribing anything to. And maybe like, listen, that's fair. That's not what we do. It's not how we think about things, but there's options in their portfolio that we're not, are not baked into our forecast.
If you're a convert bond and you're like bondholder and you say, hey, I've got this thing. Yeah, it has to 6x to get in the money, but do I want to hold out for a 6x and get a 22% IRR to par value? Or do I want to tender this company? Like, look, it's not guaranteed, right? It's not a AAA. Everything could come out bust. They could they could burn a lot of cash, but it's always hard to give up that 22% plus a kicker bond is my guess. But yeah, cool. Like Dave, I think we've done a really nice job covering most of MorphoSys here. And anything else you think we should be talking about or that listeners should be thinking about here?
No, I think it's listen, I think we've got a good company, good asset, good price, good management team. Really disciplined management team that's doing the right things. And that's one thing that we think is really important. And give them credit. To all the kudos in the world. They got to execute. They got to flip the data card over, but they're doing everything right. And that's important to us.
Awesome. So. Well, Dave, this has been great. This is a really fascinating story. It's cool to see. It's a cool drug. It's cool to see a drug that seems to be doing a lot of good that could create a lot of value for shareholders too. I really enjoyed having you on. One day there's a company you're on the board of that I'm very, very interested in that I don't think you can talk about now, but one day we're going to have you on and talk fully about that company because you want to talk about near-term, it's not data, but near-term things that could happen there. The listeners can look it up. They'll know what I'm talking about if they do a little diligence. But Dave, I really appreciate you coming on. This has been super helpful. Anybody wants to reach out on this, there's ways to find you, and looking forward to having you on for the third time.
Thanks so much for having us. We love doing it. We love all the diligence you do on prep for these things. It's a lot of work, and we really appreciate it. It's really great to talk to somebody who's so informed about it and got great questions. So
this time it was mainly because you guys gave me everything to do before, but it was awesome. Dave, we'll chat soon, buddy.
Be well. Thanks, Andrew.
A quick disclaimer. Nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.